Founders looking to grow their business are often looking for angel investors or venture capital investors to help them grow their business, but they often don't know where to look. Over the last year, I've looked at 174 pitches that were given to me, and I've tracked them all on a spreadsheet to figure out where these companies came from, how they found me, and how I connected with them. I'm going to tell you how these companies set themselves apart, and if you're looking for angel investment or venture capital investment, this is the video for you. Who are angel investors and venture capital investors? I made a whole video, you can check it out over there. But in short, these are people who are either wealthy individuals or former CEOs, executives who are interested in investing in the success of future businesses. So where do these folks hang out? They're not exactly hanging out in the cloud, at least not in the angel cloud. They're hanging out on the internet. And you can find them in a number of different groups. So I'm pretty connected and I have social media profiles on most of the popular websites. But when I looked at the data, I was able to break down where companies were actually finding me. And when I looked at the data, about 43% of the pitches that I looked at were coming from angel groups. Angel groups are communities within the angel investing community that comprise 40, 50, or even hundreds of angel investors that collectively look at startups together. Each angel group can then write smaller size checks individually, but they have more deal flow. They're able to look at more startups collectively by being part of that angel group. The second most popular way that I was introduced to companies was through demo days. And so demo days are public demonstrations that can be held by incubators, that can be held by universities or other hackathons functions where startups are coming together to present some of the work that they've been working on. So out of the 174 companies that pitched me, about 43% came from angel groups, about 19% came from demo days or other events that I was invited to, and 14% came from people who were reaching out to me from LinkedIn, and about 13 came from direct outreach. But what's interesting is comparing where people found me versus where I actually funded the company, where I wrote a check and was convinced by the company. Over the last 2 years, I've tracked 15 angel investments into startups or early stage companies, and this is how that data breaks out. Now, perhaps unsurprisingly, demo days and angel groups were proportionally similar to where I was seeing pitches. Now, the really interesting thing about the data is when you look at direct outreach, it completely obliterated all the other categories. Reddit, LinkedIn, everything else was completely wiped out by direct outreach, and these performed significantly better. In fact, direct outreach was about 26% conversion rate. So when someone was introduced to me directly or I was directly reaching out to them, the conversion rate, the filter was significantly higher. It was much more likely that I would be interested in the company and that we would move forward into the next stage of diligence. Now, each of these things that were actually working to produce funded companies were filters. And you can think of angel groups as a pre-screen filter because the angel groups are looking at companies before I look at them. The same is absolutely true about demo days. Companies that present or include companies to demo in their demo day demonstrations, whether it's incubators or other programs, will typically have a filter where they're working with that company to make sure their demos, their presentation, their team, their direction is also filtered. And the same is really true of direct outreach. People who are directly introducing companies to me, I either have a prior relationship to them or they are doing the process of screening to make sure that that startup is relevant to me. So out of the 174 pitches, LinkedIn, Twitter, Facebook, Instagram, Reddit, YouTube comments, all of these really didn't produce funded companies. So are these channels useless? No, in fact, these channels can be really, really effective for you finding the right investor, but you have to use them the right way. Social networking tools can be a really powerful tool for you to find the right investors and do your proper research before you reach out, but they're not necessarily the best way to reach out and send a DM to a particular investor. They can give you a lot of insight into who might be the right people and who you want to be introduced to, but there are other ways to reach out that I found are far more effective. Most people who reach out haven't done the slightest bit of homework or research into the types of companies I'm interested in and the types of background that I have. This really makes their outreach come across as spam. It's not necessarily targeted to me. It's really, hey, I heard you're an angel investor and don't you want to invest in my company? And that's not really how it works. You really want to do your research and target exactly the type of investor who can really help accelerate the traction and momentum within your business. So let's imagine I'm a blockchain company and I'm based in Atlanta. I'm going to want to look for people who are specifically knowledgeable about blockchain and ideally situated in Atlanta. Again, you don't have to necessarily limit your audience to that group, but as an example, that group is going to perk up and be more attentive to my outreach. So there's a number of ways to do this. I can type this search into Google, and using this query, I can find angel investors within the Atlanta area who have crypto in their biography. And again, this isn't a perfect tool, but this is an example of how to find angel investors who are targeted to a particular topic area. I can do this for any city, any topic area, and again, it won't necessarily give me the bullseye, but it'll allow me to do deeper research on who an individual investor is and what their subject area or expertise might be. I can do very similar searches on LinkedIn as well, looking for either geography, education, or other overlap that will pique the attention of the investor. If you outreach to random people you find on the internet, your hit rate is going to be very low. Whereas if you are very targeted and very specific about who you're looking for, you're more likely to get that direct connection, direct introduction via someone within your existing network. So number one, if you have a good direct connection, obviously that's your best bet. If you don't have a first or second degree connection, really do your research and really try to be as direct as you can to find the people who are most knowledgeable and can either offer you advice or capital. Don't just focus on the capital side of the equation, looking for investors who can write a check. Obviously that's important, but finding experts in your domain can really help you just as much as those checks can as well, because they can point you in the right direction. They may have knowledge, connections, and make secondary introductions that can be really valuable as your business continues to grow. When you're writing an email, be very succinct. Try to keep it under a couple paragraphs. Be very poignant about why you're reaching out to a particular person specifically and why they are the right investor or the right contact for you, and similarly, why you think you are the right person that may be interesting to them. Your objective in that email isn't to get an investment. Your objective in that email is to get a conversation. So really be specific about why you think they may be interested in your business and why you are specifically interested in them as an investor or angel. Other things that can be useful for you is applying to angel groups to present. Angel groups can give you a platform to present to lots of potential investors. Again, they have a screening process, so you want to get through that initial screening process, but this can be a good way to get in front of a lot of eyeballs. Angel groups don't necessarily have the same velocity as an individual investor, but they can be an alternate strategy. Similarly, demo days or demonstrations, hack days, incubators, and accelerators can be a good platform as well. Just be cautious about which ones you choose. There are actually some demo days that charge startups a fee to demonstrate. And I actually think this is absolutely terrible practice, and I, as an investor, never go to those. So definitely don't be scammed by pay-to-play demo days. That's not typically how the industry works, but you can find reputable hackathons, demo days, incubators, and accelerator programs that can give you more visibility and more training in terms of what you need to be a successful startup. So 174 pitches is not bad, but it's only about a year and a half of data. And so I'm really interested to hear and see where this data goes. If you're interested in that as well, hit the subscribe button and hit the bell. I'm Greg Raiz. I'm a founder, angel investor. I love talking about entrepreneurship, technology, and design. I'll catch you on the next one.